are the support levels you're looking at both on the Nifty as well as the Nifty Bank?
Yeah. So, as I said, I think this market will go into contraction, and despite the fact that we were slightly positive today, the signs of an upward breakout were not visible. So 125, 150 on the upside remains a significant barrier in the short term, and then 25, 330, which was the highs. And two, I think, we might retest the lows of 24, 850, 800 zone. I hope that this level holds. I was actually banking upon the fact that the level will see some choppiness. It will struggle to hold and it might be retested. So I think we'll start the retest process now. We already, I think, have done that. If it breaks, I'll be worried. But as long as it doesn't break, I think it should still be a market which will just chop around and not give you much of a directional bias. So on the upside, 25, 150. On the downside, 24, 850 is what I would watch very, very closely. On the index, not taking a trade on the index right now because one, the index itself look to go into a contraction phase. Two, I think the bank Nifty also, is not really showing signs of participation on the upside. So these are the levels what I believe that we'll basically just chop around in this range.
What's happening with BPCL? The stock has taken a turn for the worse, down 2% after opening up with strength. Bajaj Auto continues to exhibit strength. So your thoughts on the charts of these two names and any other trades that you would recommend?
Yeah. So my sense is that BPCL, I think, very clearly is now showing signs of profit booking. We had a good rally for all the refining companies in the last few days. And now I think they are showing signs of some profit booking. So BPCL, the first support level is around this gap which happened on the 19th of August, around 335 to about 330 zone. We are practically there. But we might get a bounce back, but I think the stock will again, see supply at higher pressure. So the idea is that if somebody is stuck, keep that stop of 330 and wait for a bounce back around 348, 349, try to exit this out. I think the up moves come to a halt. Bajaj Finance, if I was to come to it, a very good pattern. In fact, sorry?
Bajaj Auto.
Sorry, then I missed it. Bajaj Auto. Bajaj Auto, I think, it's just given very good bounce back after about 5-6 days of pullback to the 10-day average. Very overbought, but the charts look very strong. The idea is that we can look at extended targets on the upside, which is 111,500, which is where some call open interest is there. And if you look at the extension on the upside, it's about 11,780 to about 11,800. So maybe take some profits around 11,500, trail your stop loss to about 11,390, and then hope that it goes to about 11,800.
Mitesh, what are your trades?
Yeah, Prashant. So in fact, I have one sell that's on REC. REC is just on the verge of breaking earlier swing lows of around 564, 563. So we'll take a trigger at about 562, sell below that, keep a stop at about 575. Look for targets of roughly around 540 to begin with. And the other stock which I would recommend is a sell on Tata Chemicals, which I would recommend selling with a stop at about 1,060 for targets of 990.
Thank you. We'll touch base with you in a while. Let's talk about Dixon Technology. That continues to gain. In fact, it's the third day of gains. Now, yesterday, the company announced that they will be tying up with HP India to manufacture notebooks, desktops, and all-in-one PCs. Now, the stock reacted positively yesterday. Today, we've had some brokerage notes on Dixon Technology on this particular development. Upasna joins in for more. Upasna.
Well, that's correct. Dixon Technologies continues to remain in focus as the company has announced that it has onboarded HP India to manufacture notebooks, desktops and PCs. The company is in the process of signing definitive agreement in the due course. On back of this development, HSBC has given a buy rating and increased the target price to 14,000 per share. It says HP is a leading player in India's PC market. And like mobile phones, Dixon looks set to capture a significant portion of India's IT hardware manufacturing market. Large scale in mobile and IT hardware to create backward integration opportunities. Next up is CLSA. It has given a hold rating on the stock and target price to 12,100 per share. It says over the medium term, company's focus is on raising backward integration to component manufacturing and ramping up of new segments. Dixon now has tie-ups with 4 of the top laptop brands in India and aspires to gain 20 to 25% market share in the segment over the medium term. It has also highlighted that the company is eyeing industrial EMS as one of the next big growth drivers and is also looking to expand via various organic and inorganic opportunities.
Okay, all right. Thanks for that, Upasana. Prakash, what do you make of this one? Dixon, up and about in today's trading session.
Oh, absolutely. It's a flyer. There's no doubt. You look at what the PLI scheme has done to bring life back into this very small segment that's become such a big, potentially large sector. And Dixon is absolutely on top of that, Nigel. So, of course, the price rise makes it even more expensive. But I think the market's trying to price the growth going forward for the next few years. Earlier, there were issues related to margin improvement because they were focused on to just a few categories, which was more on the basis of the PLI support. But now I think the way it's expanding and opening up for them, I can tell you, there's so many small EMS players that I've met in the last 6 months. A lot of them have been talking about venturing into this hardware side for the simple reason that all of this was imported from very low-tech, geographies like Taiwan, Korea, and all of that. And now, with the ecosystem developing, even the equipment suppliers have set a base here. So somebody mentioned that you have support which is 24/7 on a lot of these equipment which need to be actually working continuously. So if that has to happen, I think India could build itself a very credible space in this. So Dixon is of course good, but also look at some of the names like D-Link. I mean, these are sleepy names. We don't talk about them much because they used to be in the connectivity, networking solution hardware. But there's so much change happening, Nigel, even in that. And I can tell you with data centers growing so rapidly, there will be a derivative demand growth for all of these places. So, players like this will reinvent themselves. Those who do will, of course, benefit. So just wanted to bring that to your attention.
There is another EMS company, Kaynes Technology, which is also in focus considering that the Semicon India was inaugurated today by Prime Minister Modi. And Jefferies has written on Kaynes Technology. They're saying that the company received that OSAT approval just last week. The company is targeting $1 billion of sales by FY28, which implies an FY24 to FY28 growth of 47% CAGR. So their own estimates are that sales go up 42% every single year for the next 4 years. EPS goes up by 48%. The stock, according to them, is valued at 65 times. The stock rallied last week when they got that semiconductor approval for that unit in Gujarat. Prakash, there is another stock that we wanted to, okay, we'll get to that in just a bit. But your thoughts on Bajaj Auto and what is happening here?
So I think Bajaj is getting to now ride the next wave, which is probably going to come from this new version of the FAME policy. I mean, look at what they did. They came in much later than the TVSs and Ethers of the world, and of course Ola, and started building themselves into that space after understanding how distribution and the sales dynamics work. Chetak has been a very good success. Anybody who's used it actually vouches for the kind of dependability and reliability. So I think that's one new segment that they very clearly straddle on. The other one, Rimal, which is going to be a big improvement, according to me, is going to be the CNG product range. If that were to get established, you'll probably see this entire company's business getting revisited in a very different way. And then, of course, you have exports, which keep supporting though they've been a bit tepid last quarter, but I would believe the domestic entry-level sales, the rural pickup, which Hero is also kind of predicated on, will benefit Bajaj in any case, and you have these two more vectors to add to it. So good going for them. But of course, is it the right time to buy? My sense is it's a bit expensive, and they will now have to wait for execution to justify these valuations, especially in the last 3 months. The valuations have actually started getting to be a bit steep. So you'll have to wait for the catch-up on the earnings to justify this.
All right, paint stocks are the next set that we want to talk about. They're buzzing in trade. Mangalam is here to tell us why. Mangalam, the drop in oil perhaps helps input costs. What else?
The drop in oil helps input costs, and that's just one of the triggers for the paint companies to rise in today's trading session. But if you look at the last few months, the underlying tonality of managements who have been speaking and who've been talking about this sector itself has indicated that there could be a sense of the worst being behind the paint companies, at least the legacy incumbent paint companies itself, and that's further aiding the rally that we're seeing in today's trading session. So if you look at the commentary post first quarter numbers from all of them, including Asian Paints, on the demand front, they all expect double-digit volume growth this year. Volume will be aided by a rural uptick. Add to that, they've already taken 1 to 2% price hike. So in light of that, a decline in crude prices should bode well for them. Some of the paint raw material prices are near 1-year low, whereas crude price itself is at a near 3-year low itself. Demand doing well, raw material benign. What could be the third imponderable? It could be competition. Out there as well, it seems like the street has sized up what Birla has on offer after 6 months of their operation. So Asian Paints in their conference call did say that, new launch seems to have underperformed expectations. Bajaj Paints says that initial enthusiasm of the new entrant appears to be fading away, including among dealers, and that's an important point that they made. Kansai and Nerolac said that they have higher confidence now than what they had 6 months ago in dealing with the new competition. And even the fourth, fifth largest player, Indigo Paints, has said that they've observed no changes in the competitive landscape or pricing pressures. So with competition fears abating, demand improving, and raw material prices reducing, what could be the fourth thing that you'll be watching out for is the valuations. Remember, all these paint companies have been underperformers in the past. So at current reckoning, Asian Paints trading at 54 times, you would say that it is absolutely expensive, but on a relative basis, it's trading at much lower valuations than it was over the last 3 or 4 years on an average. Berger at 49 times, and Indigo itself is trading at 38 times. What are the important things to track now going forward? The most important thing will be how the festive season pans out for Birla Opus, because irrespective of how the launches are, you have to see the first big festive season for a new competitor to really test their performance. So that's one thing we'll be watching out for. And the overall festive demand itself will be something that we'll keep an eye out on, given monsoons have been little above normal as well, and raw material price environment. We've seen crude prices decline, but who's to say they will rise in the next couple of days or so. So if there is volatility in raw material price and the raw material environment, there could be some instability in the company's margins as well.
All right, Mangalam, thank you very much for that. And I'm just looking at Asian Paints long-term chart. I think from 2002 all the way to about 2021, you basically had it's a beautiful upward sloping chart, almost at a 45-50 degree. And then, of course, after that, for the last 3 years, it's absolutely plateaued out with not very much price gain. Actually, the stock's at about 33.67, and the high in 2021 was 3,500. So yeah, I mean, three years, and of course, I mean, there is of course the outperformance, but at the same time, there is also, as Mangalam pointed out, a lot of new players, larger groups, etc., getting into the space in a pretty large and significant way as well. I don't know if Prakash, you have a view here, and if you really wanted to buy a paint company, which one would it be?
So, Prashant, it gets quite colorful as you see the dynamics of this industry changing, figuratively speaking as well. The market leader has reinvented itself so well in the last 7-8 years that it's no more depending on paints to grow. Now all of that will start getting into growth assumptions subsequently in the next 5-7 years. So if you really want to latch on to the paint business, I think Asian Paint offers one of the best combination of positive, favorable factors. But you could look at Berger for the time being in terms of a catch-up, given this advantage of raw material prices going down, no price hike, no price reduction on the offing. There could be a little bit of a reset where Berger could do well, but I'm talking about a 10-15% tactical bumper. But otherwise, long-term basis, I think Asian Paint is yet to kind of show its true colors, and you will probably see it get into a very new trajectory very soon.
Okay, all right. Thanks a lot for that, Prakash. Well, for the time being, though, we'll have to slip into a short break. We'll come back. Rajesh Bhatia of ITI AMC is waiting for us on the other side. Don't go anywhere.
Okay, welcome back. 130 points lower on the Nifty. So I think we're at the day's lowest level, 24,900 or so is what we have. Rajesh Bhatia is Chief Investment Officer at ITI AMC. Rajesh, good afternoon. Good to have you with us here. I think you've been a little cautious at the margin. Markets have been anything but cautious. They've moved on and, once in a while you get a 100, 150 odd point cut and the chatter starts whether this is the start of something or the market is going sideways. So I don't know if that today is one of those days, but broadly the markets have been very constructive. So briefly, if you can circle your thoughts on where we are in the markets, and then we want to ask some sector-specific questions to you. Go on.
So, Prashant, you're absolutely right. I mean, it's remarkable how strong the market has been. In fact, we are also observing the markets. It's a bull market, and we are also observing the markets. What we do observe at this moment is that there is certainly a level of churn that is happening. I think there is a fairly consistent weakness in public sector enterprises, defense. Some of the popular categories like defense, etc., have also been been a little weak, capital goods to some extent, etc. And there is enormous strength in IT, pharmaceuticals, and consumer names. So there is some bit of churn that is happening, but at the index level, everything is really reasonably strong. I think a lot of the trepidation or the fears are really coming from the global markets. I think people are concluding, and they were always worried that China is really a structural growth challenge, but now that the slowing down, which was really the only developed market which was really strong, but it's also slowing down, and therefore the world slows down. And because of this, some of the commodity prices come off. You look at iron ore, you look at oil prices, and people start to conclude, my God, if this is going to be a slowdown, India is also going to get impacted by the global growth slowdown. So I think there is some kind of churn that is taking place to defensives. Some of the popular categories are moving down. There is global fears, but my sense is at the index level, we are still very, very, very strong.
The mid-cap index is selling off pretty rapidly now, down 150 points in the mid-cap index, 0.25% lower, and Brent crude prices, by the way, have bounced a bit. So in the morning, it was $69.50 per barrel. Now we're approaching 70.75 on Brent crude prices. Rajesh, do stay on. There's an important story that we want to talk about, where sources tell CNBC-TV18 that the Union Cabinet is likely to take up FAME 3 scheme with an outlay of 10,900 crore rupees. Parikshit is now joining in. Parikshit, is 10,900 in line with what the street was anticipating in terms of a FAME 3 subsidy scheme?
That's right. The FAME scheme has now been renamed. It will be called the PM E-Drive scheme, is what sources tell us. Today is the cabinet meeting in the evening, and following that there will be a press conference where the government is likely to announce the third phase of the FAME scheme, which will be called the PM E-Drive scheme, and also a payment security mechanism for electric buses. Now, that had also been an ask of the industry, but focusing on the electric vehicle mobility scheme. This comes as a huge relief because there was no clarity when that scheme is going to come. Now, the PM E-Drive scheme will have an outlay of 10,900 crores. It's likely to be for a 2-year period. So what are the subsidies going to be like in which categories? So subsidies or demand incentives worth 3,679 crores have been earmarked to incentivize electric two-wheelers, three-wheelers, electric ambulances, electric trucks, and other emerging electric vehicles. The scheme will support 25 lakh electric two-wheelers, 3,10,000 electric three-wheelers, and 14,000 electric buses. 500 crores have been earmarked for electric ambulances, another 500 crore for electric trucks. So this is a positive for certain truck manufacturers in the country. Having said that, and this is important, electric cars have not been covered under the proposal. We are still waiting for the final announcement, but from what we hear is that electric cars have not been covered either for the fleet segment or for private mobility. So they will be off limits as far as the PM E-Drive scheme goes. Another important feature is this. The government had been feeling that they have been putting in lots of money in subsidies for electric vehicles across the country. The end user is benefiting from these schemes, but he does not know that the government is paying a portion of that electric vehicle for the customer. Now, when a customer buys an electric vehicle, he will be told that he's buying a vehicle under the PM E-Drive scheme. He'll also get a certificate which shows the amount of subsidy he's got from the central government, the name of the ministry, and also the name of the scheme as well. So this is the government's way to make sure that the last mile user of electric vehicles knows that the government is bearing a portion of the cost that the electric vehicle, bearing a portion of the overall cost of the EV.
Okay, Pariksha, thank you very much for that. So some festive cheer for EV two-wheelers, three-wheelers, buses, and even electric ambulances. But as he pointed out, electric cars are not going to be covered in this new scheme, and there is a name change too. Rajesh, Ola Electric, or would you go with some legacy players? Are you bullish on this EV opportunity for two-wheelers?
So I'm bullish on the electric vehicle opportunity because I think the understanding is that over a period of time, the cost of electric vehicles will come down. And over a period of time, the cost of IC engines actually will fall. So, EVs over a long period of time are definitely going to become more attractive. And I think that's a global conclusion right now. I just read today that Honda is also going to launch its own two-wheeler EV. It's probably the last one to kind of announce among the major players that it wants to get into an electric vehicle. Now, like as Bill Gates says, sometimes we overestimate the technology penetration in the short term, but underestimate it in the long term. So my sense is that probably we are overestimating how much electric vehicles could be absorbed in the short term. Look, even the two-wheeler space, where it's the maximum, it's only 7% of the total market. And my bet, if you're asking me, is still with the incumbents, because there's a lot of deliverables that the challengers have to yet deliver on. So my sense is that given how the existing players, incumbents have done, I think I would really back the incumbents rather than the challenger.
Okay, all right. Rajesh, stay with us. I wanted your view on cement on the building products theme as well. The stock that we are looking at is Prism Cement. In the last two sessions, the stock is up close to around 30%, and it's moving on very, very large volumes. First, a basic detail about the company. What's their mix right now? They have a cement division, they have, the RMC division, and also they have the HRG. That's, the division that has tiles, bathware, sanitary as well. So that's the broad revenue mix up for them on the screen. The volumes are very, very high. Otherwise, it's quite a tightly held counter. Promoters have more than close to around 75% stake in the company, close to around 74.9%. SBI Long-Term Equity Fund, they have close to around 6%. And you have Jupiter India Fund that has close to 2%. The volumes are much higher than what we normally see, but that's a broad shareholding pattern up for you. Now, the net debt in the last few years, well, they did a deal with Ramco, and they've deleveraged themselves a little bit from around that 1,400 crores odd. It's come down to around 855 crores as of the last record number. How do valuations shape up? Now the stock, in fact, is at, the market capitalization is roughly around 11,800, 11,900 crores approximately. So you put the debt together, the total enterprise value is around 12,800 crores. And last year, they delivered an EBITDA number of close to around 500 crores. I was looking at an Equerris note. They are talking about the EBITDA number, moving from around this 500 crores to around more than 1,000 crores by FY27. How is that possible? They're focusing on, changing their power mix. They're also focusing on various cost efficiencies. And that's where they believe that, in fact, the EBITDA number will move to around 1,000 crores. So that's doubling of EBITDA in a matter of close to around 3 years or thereabouts. But if the enterprise value is close to 13,000 crores, you even have an EBITDA of close to around 1,000 crores, it appears valuation-wise are pretty much full, right? At around 12.5 times EV upon EBITDA on a forward EBITDA number. Then what is the street expecting? There appears there are two factors on its wish list. One is maybe demerge the entities and try to unlock some value. So we'll have to see how that goes. And maybe post the demerger, maybe in fact, the other factor that the street could be hoping for is maybe divest one of these verticals. So we'll have to see how it goes. Remember, the cement division itself is a 6 million ton plant in central India, which normally gets a premium, multiple out there. So we just wanted to highlight the fundamentals of the stock. Prism Cement, the stock has been on fire. So we just said that these are the factors, and those are the two factors that could be on the bull's wish list. Rajesh, I wanted your view. Every now and then, since I track cement as a beat, suddenly you have this spurt in some of these stocks. We had had a big move in Novoco earlier when the stock went about and everyone said it's getting bought out. Then you had Orient. Now you have Prism that's doing the rounds. And to be fair to the street, actually a couple of deals did get closed out. So it's not wrong being optimistic. But how are you all placed on this space? Cement, tiles, bathware, etc.
So specifically on the cement sector, look, this has been a phenomenal sector in the last 20, 30 years. I hardly remember any year in which cement would have experienced a negative volume growth. There are many wealth creators in this category, right? I mean, I don't have to name them, but look at the list of companies that are there in the cement business, and you'll see them compounding as good as some other paints companies have compounded at. Having said that, there is a bit of a challenge now with the sector. Earlier, there used to be downturns where people used to exit the business. But the downturns in this business have totally gone away. And if you look at the last 10 years, the EBITDA per tons have ranged between 800 to 1200 rupees a ton. The logic was that EBITDA per ton should go up as the capital cost of putting up a cement capacity is rising. But that has not happened. The result, your profit growth for the last 10 years for most cement companies is 10% per annum. And even today, we are looking at an overcapacity and probably about a 75%, 78% capacity utilization. So I think the industry structure itself is such that you can just get nominal growth. Of course, you can have an asset-based valuation where some of the stocks have done well. But in terms of earnings growth, the last 10 years have been very tepid, and I'm not expecting blowouts as you move forward like that.
Okay, got it. Rajesh, to sort of go back to the first point, you said some of the popular segments have taken a backseat, railways and defense and PSUs, etc. So has a new leader been anointed, or that is still pending? And where will money be made?
So it's work in progress. There is IT, pharma, and consumer, but I don't think they are available at very cheap prices either. They're also at reasonably priced to probably slightly expensive valuations. But probably this is a path, this is a bull market. This is a path where probably money, which is still in the system, is going to more defensive sectors. So my sense is that what is the best thing that you can do? Stay invested. See, this is a bull market. Is there a reason why you are getting, you can get a more than a 20% correction in the market, which is a bear market? We don't see any reason where you can get a 20% correction. Can you get a 5 or 10% correction, which is a correction? That is quite possible. So I don't think there is any reason why you can get a very big correction in this market, because of which, in a bull market, just stay invested. India is a great story. You may probably suffer a 5 or 10% decline, but on a multi-year basis, I think India is the place to be.
And on banks, Rajesh, banks have tested the patience of investors. Despite everything working for them, they just haven't performed. Rajesh?
Rajesh, we can see you, Rajesh. We wanted your comment on the banking names. I think you have a preference out there. It's, I think, private versus PSU. So tell us more.
So my sense is that the PSU basket did extremely well, as the credit costs, etc., came off and interest rates rose. The economics or the ROEs gravitated closer to the private sector banks. But my sense is that valuation discount, which was there, has also now gravitated towards the private sector banks. So because of which, my sense is that the discount is no longer available in public sector banks. They are far more leveraged than the private sector banks, and their ROAs are structurally lower than the private sector banks. So our preference has moved from public sector banks to private sector banks.
All right, Rajesh, we leave it there. Thank you very much for your time. Appreciate you joining in with your thoughts and perspective. Appreciate it. Well, we'll take a quick commercial break here with news that the market, of course, is down and out, 120 points lower. I think, it's a bit of a cut, almost 200 points, by the way, from the day's highest point. I just want to highlight what's happening on Zaggle. Zaggle is up about 11%. I think yesterday was a small move. Today is a real big one. The news, of course, I think I saw that they've tied up with HDFC Ergo to provide some services. but it's a very large move. The high today is 420. Stocks at about, it's come off a little bit to about 406, but still holding with a 10% plus gain. We'll take that break. We are back. Nimesh joins us on D Street Chatter, and we'll get you some trading ideas as well. Stay with us.
Welcome back. Well, the market's still down. There has been a wee bit of recovery, though, from the low point of the day. So that's good news. Bulls trying to pull back a little bit. The Nifty Bank as well is back at around 51,000 odd. But Nilesh is the best place to tell us about what he's picking up in terms of D Street Chatter. Nimesh.
Hi, Nigel. A sharp sell-off in the last 30 minutes of trade. No specific reasons. I guess one of the reasons could be the fact that the Dow future is also down sharply, and maybe India markets are reacting to that. But from a flow perspective, it's not very bad. There is no big aggressive selling as well. In fact, the FIs are net buyers in the last couple of days, and that seems to be the trend today as well. So there is buying from larger FIs in the defensive names. The big pain point seems to be the PSUs in the auto stocks, largely dragged by Tata Motors. But it's the PSUs which are under pressure for the third day running. I've been saying for the last couple of days that there is pressure in the power PSUs. Today seems to be the case for oil PSUs as well. Despite falling crude prices, the OMCs are under pressure, and that's not a good sign from a market point of view. That the good news is getting sold into in many stocks, especially in the PSU names. That was the case with the defense stocks as well. Even the broader market seems to be a bit wobbly today. Mixed signs of signals. There are a lot of stocks which are under pressure as well, and even the advanced decline ratio is slightly towards the decline. So net very sharp sell-off in the last 30 minutes of trade. But from a flow perspective, I understand there is buying from the larger FIs. Okay, got it. Nimesh, what about individual stocks? What are you picking up? Well, so the first stock in my list is Arvind Fashion. There was a large block, and the stock is record actually after the block deal. 4.5% equity got changed hands. I understand the private equity investor was a seller in today's block, and 3 or 4 mutual funds were buyers. So disclosures could be interesting there. The second name is Brooks Lab. Not much that we track or talk about, but that's been buzzing off late, and I understand there could be a corporate development largely on the lines of fundraising by the company very soon. The third name is Honasa Consumer. Again, while the stock is under pressure today, but the stock largely has been consolidating after a big move in the last few weeks. But now I understand there could be a very large block deal very soon. Remember, the private equity owns a large stake, close to 23%, and there could be potential sellers there. And the last is GAIL. Well, the stock is under pressure, largely on back of overall pressure in the PSU names, but there is buying in GAIL in today's market, and also there is a Morgan Stanley tactical buy as well on GAIL for the next 30 days. So while stock is under pressure, there are buy flows from larger FIs in GAIL today.
Any update on the Paytm block, Nimish?
Not really, Prashant. It's been talked about that the block can come very soon, but not that I've heard anything fresh. The last update was that there could be a large block, and potentially a strategic investor is likely to buy that block.
All right. Thank you very much, Nimish, for that. We'll keep an eye on some of the other names you mentioned as well. Mitesh is with us with what to buy or sell today for a reverse trade when we're back tomorrow. Mitesh, what do you have?
Yeah. SCBT on Vedanta, it's closing at the day's low. So keep a stop at 430, look for 418 as the target. And similarly, Tata Motors, I think, that's the stock which is turning negative. It opened with a gap down and has been negative. So we take a SCBT here with a stop at 985 for targets of 964.
Okay, all right. Thanks for that, Mitesh. Well, let's move on then. Let's get you some opinion, actually. Increased Chinese steel imports are having an adverse impact on domestic players, and the government could consider hiking tariffs. That's the word coming in from the sidelines of IMA National Management Convention. Lata Venkatesh caught up with Mr. TV Narendran, the MD and CEO of Tata Steel, to get his views on the issue. Let's hear him out.
The big problem is they are selling steel at prices at which they are losing money. And this is having its impact on the rest of the industry across the world. Other countries have taken action, and I think India should certainly look at taking some actions. To some extent, the iron ore and coal prices have dropped, and that's helped support or limit the losses, let me put it that way. But the problem is acute, and the financial statements of the Chinese steel companies state the obvious. And the chairman of the biggest Chinese steel company, Baowu, has also himself said it publicly that the industry is in very bad shape in China. So I think we should not let them export their problems to us. Honestly, in this industry, unless you make a 15 to 20% EBITDA margin, you will not have the cash flows required to build new steel capacities. Because building steel capacities is a lot of money. It's $1 billion, a million tons roughly, right? So you need that 15 to 20% EBITDA margin, and otherwise you will not be able to build capacity. You can survive, but you will not build new capacities, and India needs new capacities.
Okay, well, that's some interesting commentary from the country's largest private sector steel maker, Tata Steel. Now, Goldilocks Premium Research's founder and chief strategist Gautam Shah gave us a sort of look into his thought process on the market from here. Near term is a little muddled as far as risk reward is concerned. This is Gautam. Listen in.
That the market is looking a little exhausted. I think the up days are not as strong in terms of momentum and participation. In fact, the down days last week has been a lot more stronger. So I think the numbers are very clear from a short-term perspective. 25,150, I think, is an important barrier, which we hit yesterday at the highs. And 25,500, 600, according to me, is a sort of a ceiling for now. And I'm not looking at any number beyond the same for the time being. On the downside, I think the 24,800 area is an important support. If that were to break at any point of time, you could possibly see a 5% dip on the Nifty. There are some global headwinds, and that's been validated by what has happened on NYMEX crude in the last few weeks. Mind you, for almost 12 months, NYMEX crude was in this band of about 70 on the downside and 95 on the upside. Breaking 70 only means that there is a problem. There could be a problem economic-wise. And I think with the follow-up that you've seen in the last 5 days, it does look as if NYMEX crude is going significantly lower from here, maybe another 10, 12, 15% downside, which I think will be a little problematic. On the other hand, if you look at gold and silver, they remain absolutely steady on the charts. In fact, I do believe that gold will go on to do very, very big things over the next 6 to 12 months. And that's been our stand for the last 18 months. I think over the next 12 to 18 months, you will see a $33.50 on gold, which is a nice 25% rally from where we are. And I do see a similar 25 to 30% upside on silver coming in. So at levels of 28, 28.5, I think the downside is very limited and the upside is large.
Okay, all right. Well, Prakash Diwan is back with us. Prakash, I wanted your view on Prism Cement. Did a little birdie tell you anything about it? I hope it's not the same one who's told us the same story in the last many years. But you know, Prakash, it's so interesting because we heard about Kesoram, we heard about Penna, and then suddenly in the last 12 months or so, India Cements, all this have actually happened. And these are stories we heard for 10 years. So I don't know whether it's Prism's time as well. We have heard the same story. Raijas could be looking at some kind of, looking at selling out some asset or bringing some investor into one of their businesses, etc. over the last 10 years or so. That didn't happen. But do you think the time is right this time around? Do you think the street is sniffing something?
So, Nigel, I have not much of any inkling in terms of any corporate action there. But what I can tell you is that out of all the eligible, brides that were available to get married, here was one that probably was the most promising in that sense, met all the requirements, checked all the boxes. And probably if there were a time to have any kind of a move happen in terms of consolidation, which is underway in the sector, probably could have been better than today. So from that perspective, the willingness to do these things was always there with the management, and now probably the market also has that kind of a room. So you could expect some mistake. And what probably the stock price is telling you is that there was a little bit of a lull in the price all these years, or all these months, if not years, and that's kind of played catch up. So it's more of that. If something happens, it'll probably be at a better valuation than where it exists. And that's what the market's factoring. But beyond that, it'll probably be a bit hazardous to, kind of make any conjectures out of this.
Zaggle Prepaid, the stock has had a phenomenal run since its listing. This year, the stock is up nearly about 82%. The only news flow, the recent news flow, is the partnership with HDFC Ergo General Insurance Company. But the management has been sounding very positive, talking about exceeding the guidance that they've set for themselves. So things are looking up for Zaggle. Have you analyzed the company at 400?
So, Rima, what's proving to be very interesting is that, of course, even this tie-up for that matter, which they just announced with a non-life player, it opens up the way for a lot of these PPI businesses to expand, into territories or in segments which hitherto were not factored in. So from that perspective, it has the right to win because it's had a head start. It's got a proven, track record, very good credentials. And I can tell you, when I speak to a lot of people in this space, and especially after the recent global fintech fest that happened, we've been hearing a lot of money that's been committed to expanding these businesses, deepening the segments that they cater to. From that perspective, I think Zaggle stands a very good chance. So this is exactly at that cusp where they could catapult into a very large player with a fairly large addressable TAM. And from that perspective, the market really liking the expectations that have been being built into the price. And it doesn't seem as expensive given that it could grow. So, but would I go ahead and buy it? So after looking at the numbers, I believe, yes, there's promise. PEG seems to be coming into a zone where you could buy it, but the multiples are still a bit high. So execution risk becomes an important thing. So I would give them some time. But yeah, it's definitely looking much more promising than it did, let's say, about a month back.
Yeah, no, this is one of those names, right, where as you said, the addressable market is very, very large. The organized workforce, basically, even the unorganized in some senses when you speak with them. So they've got all of that going for them. Stock's done well from the listing price. We'll take a quick break right now, Prakash. We'll come back. And there's I think only 9 minutes to go for market closing. So stay with us. We'll be right back.
Welcome back. We're ending above 24,900, but nearly 200 points off from the session highs and a 100-point cut. Prakash, Tata Motors, the street seems to be concerned about the discounts offered by JLR. Wayne.
Yeah, I don't think we should take this as a big setback or something. I mean, there are always dynamics in terms of sales. And remember, it is the global shift towards EVs that they will have to accelerate, Rima, for the simple reason, the way the Chinese have been able to dominate that market and accelerate the growth. It's going to be a fair competition in terms of IC engines from this growing EV acceptance. So it's something which they'll have to work on, but can you write off the company in such a significant way and expect it to, come down? I don't think so. While JLR, of course, is global, faces a lot of headwinds, I would believe the India market will be fairly supportive and they will reinvent themselves out there. So this could be an opportunity to buy. I know it's not for the faint-hearted, but I would look at buying it at lower levels with an expectation that it will catch up to its previous highs.
Talking about not for the faint-hearted, Prakash, I wanted your view on SpiceJet. In a short while from now, we'll be hearing from the Interglobe Aviation Management. And, that one has just moved one way. It's flying higher and higher. Now the street is wondering whether SpiceJet has enough of tailwinds. The second half of the year is normally good for the travel industry. You have the crude oil prices that are cooling off, which is a bit of a benefit. And, you have one large player and the street is looking for an alternate. But can they come up with the money? I know a couple of bankers who are working on the deal and we're waiting for a feedback over there. But what's your view on SpiceJet at around 63 rupees?
So, Nigel, even if they are able to get some money to breathe some life back into this and get up in there, I don't think it's going to change things for them very, very dramatically very soon. So it will be a very arduous uphill journey for them. In the meanwhile, you have Indigo, which continues to not only gain market share, but it also has the advantage of the forthcoming merger between Vistara and Air India, which means Vistara will be off the skies and it will be only Air India now. And then you have Akasa, which is struggling to get new aircrafts, and Spice, of course, we know. So my sense is, rather than focusing on whether the beleaguered SpiceJet will start getting some strength, I would believe it's better to put money into Indigo, given the crude softness, I think, and the price hikes that they've been able to get away with, at times criminally high. But, as a business, I think they're doing exceedingly well and they'll continue to do well. They'll probably surprise the market in the next few years, probably go to that 10,000 mark as well. So, that's the kind of strength they're sitting on. I would rather focus on the positivity that Indigo brings.
No, absolutely. Prakash's, of course, view is stay with the winner. This is a turnaround.
You're flying or investing, I guess. Stay safe.
Absolutely. There's 2 minutes to go for market closing. So let's start wrapping down things. Prakash, thank you for joining us here. But we're going to come back to you in just a bit for more. What do we have in terms of the closing? Nifty ending about 200 points off the day's high. And 25,111 was the day's high, which coincides with the high we saw yesterday as well. And there was a bit of a drop then since Bank Nifty again also came off. So we ended 51,030 here. The important level is 51,222. We managed to surpass that yesterday, but today we fell back under it. Mid-cap index flat, small-cap index down about 0.5% the last I looked. So that's essentially the lay of the land as we wrap things out.
The advanced decline ratio firmly skewed in favor of the stocks declining, 1:2. In terms of individual stocks, Bajaj Auto tops the chart, 4% gain on Bajaj Auto. Then you've got Asian Paints rallying more than about 2%. Britannia, HUL, ITC were some of the other winners in the FMCG pack. Bajaj Finance also clocked in a gain of 1.5%, and Shriram Finance managed a positive close. On the way down, you've got Tata Motors weak. UBS note pegs the target price at 825 with a sell call. So Tata Motors was the top Nifty loser. Other than that, ONGC was weak in trade. It gets impacted negatively because of the fall in crude prices. Wipro was subdued after yesterday's rally, so some profit booking visible there. L&T, Reliance was some of the other heavyweights weighing in. And in the banking pack, State Bank of India was under pressure. In fact, most of the PSU banks were weak in trade. Well, just about a few seconds to go before the bell goes. The last tick on the Nifty is between 24,900 to 24,950. 100 points lower on the Nifty. The sensex ends in the green, up nearly 45 points. It's a wrap and closing bell, but don't go anywhere. We've got a very special conversation with the management of Indigo lined up on the other side.